Hey guys, Jared Wesley here of Live Traders, and it is that time of the week again. It's lecture time. This week's topic, guys, is something that relates to the current events in the market specifically, as well as all trades that you will take. A lot of people are saying, hey, you need to do more swing trading stuff. So I did a lecture last week on swing trading, and I'm still getting emails about saying, hey, do more swing trading stuff. Well, this week's lecture, guys, is something that applies to all traders in all time frames, whether you're trading crypto, whether you're trading Forex, whether you're trading stocks, whether you're trading futures, E-minis, whatever. It applies to everybody. Whether you're trading 2-minute charts, monthly charts, yearly charts, it doesn't matter the time frame you're trading. It doesn't matter the vehicle that you're using to make money, okay? This week's topic, we're going to be talking about trend lines, trend line breaks, and how trend lines, specifically trend line breaks, help predict the future. You're going to see here in this, in today's lecture, guys, that sometimes when you draw a trend line, the future pivot is already predicted long before it ever happens. All right, it's the closest thing you're ever going to get to a prophecy in trading, so to speak. Okay, so when you look at it that way, this is a very, very powerful lecture because it can help predict the future. And what am I getting at? We draw trend lines on the Qs and the SPY, which means the current market we draw trend lines on, and you're going to get to see an opportunity of where the market is likely going to pivot over the next few weeks, more likely over the next couple months, and you're going to see that pain is probably coming to the markets at some point in the future, guys. Maybe not immediately, but in the longer term future, because we can't continue to keep what we're doing and expect the market to not pay for that, right? The Fed is dumping tons of money in it. We have a pandemic. We have 40 million people unemployed. We have riots going on. We have all this stuff happening, and the market seems like it's in its own little bubble. It's isolated bubble, and that's just not normal. But you'll see, you'll notice the trend line will predict it. Okay, technicals will predict the future. So I think it's one of the better lectures I've done. I think all the lectures are solid, but this is one of the better lectures I've done in a while. It's going to help make you a better trader. And the best part is drawing a trend line is such a simple thing to do. It's not that difficult. Anybody can do it. Even brand new traders can do it. You don't need years of experience to do it. Okay, so today's lecture topic, guys, trend lines, trend line breaks, showing where a stock or the markets are going to pivot. It applies on 1-minute charts, 5-minute charts, daily charts, monthly charts, yearly charts. It's applicable to Forex and crypto and Bitcoin, and applicable to stock trading and E-minis, etc. It's applicable to everybody, options traders. It doesn't matter. Okay, again, apologize about the background, guys. My office is being redone, so I have to figure out another space to do these. All right, so I'm Jared Wesley, guys. Let's get to it. All right, guys, this week's lecture is trend line breaks and transitions. Learn when the market will turn, okay? A lot of people are asking, you know, how do I know when it goes from a stage 3 into a stage 4 or a stage 1 into a stage 2? And I got an email recently from somebody who said, you know, Jared, I saw a stock that clearly looked like a stage 3, and then it kept going higher. Well, a couple comments on that before I dig into this. We're not right 100% of the time. If we were, we wouldn't need stop losses, right? So there are times when stocks absolutely look like they're going to pull back and turn around. They might break a little bit of support, and they look like maybe they're going to go from a stage 3 choppy area to into a stage 4 downtrend, and then magically they turn around. It could be a news report. It could be earnings. It could be a lot of different reasons for it. But just know that it is, and that's why you have a stop loss for it. So you still do your due diligence, you still do your homework, and if it looks like a stage 3, treat it like a stage 3. That's the number one thing. If it looks like a certain stage, treat it like that stage. And if you happen to be wrong or the stock surprises us, then we stop out. That's that. I mean, don't be upset over it. I mean, we're not right all the time. They're perfect 3-bar plays that fail, right? So in that respect, it is what it is. But before we get into all of that, I thought you guys missed it last week, so it would be a good time to talk about when will the insanity stop. We took a little break last week from the insanity, and this week we're back to the insanity. Why? Because, well, the market's insane these days. It's absolutely unequivocally off its rockers, okay? So this week's aren't crazy, but I think in many ways they're more appropriate and more important. And the reason why is
they're things that most of you are doing. So it's not one of those where, oh my gosh, somebody lost $190,000, but they're things that many of you have done. So in that respect, the insanity is far more relatable this week. Okay, it's far more relatable. All right, so the first one, somebody sent me an email, all right, and I'm just going to get to the gist of it, okay? I couldn't take the loss on the losing days, so I continued to trade. Fear of being wrong. I had gotten away with it until yesterday. I lost 17R in one day. I started trading more size to get it back. It was stupid. It ruined my long weekend. If I stopped at minus 3R, which my plan says, I'd still be up 2R on the week. Basically, the gist of this is this person was actually up 14R for the month. They were up 14R for the month. This happened in late May, so this is like a little less than a week ago. And in one day, they gave back their entire month plus 3R, right? So they gave back their entire month plus 3R. Now think about this for a second. You just worked 20 trading days, 20 days, good effort, good job, followed your plan, made 14R, and in one day, in 1 hour with stupid brain fade, you gave back an entire month's worth of work. Wow. So in this respect, it doesn't have to be $100,000. It could be $500. It could be $2,000. It could be $10,000. It's the principle that you worked all month long, and in one moment of stupidity or a momentary lapse of reason, boom, it's gone. Learn, guys. Mastering yourself is the separation between freedom and working for the man. Read it again. Mastering yourself is the separation between freedom and working for the man. Okay? So again, this is not a tremendous amount of money for this trader in terms of actual dollars and cents, but it's what it represents. A month of hard work, he just gave it back. Imagine if you did that at your day job, guys. Let's say you make $10,000 a month on the last day of the month. You're like, yep, your boss comes and said, you know what, I'm going to need that money back. I'm sorry. You'd be like, what the hell am I here for? Why did I work all month for you? For free? Yep. And that's what some traders do. All right, here's the next one. This person is trading crypto. Why did I put this in? Because I get tons of emails about crypto and Bitcoin and all this other stuff that I don't trade. But guess what? 2 comments. 1, charts work in everything. You see this chart? It's actually a decent breakout, isn't it? It's not a bad breakout on this chart. So charts work, whether it's options, whether it's crypto, whether it's Forex, whether it's stocks, etc., E-minis, futures, blah, 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 blah. Okay? This person thought, or this person's brother, I should say, thought it would be a really good idea not to take their stop loss. So they lost 50% of their account in 1 hour by not using a stop loss. 50% of your entire account in 1 hour by not using stop loss. So this tells me 2 things. 1, this person was risking far too much money. There's no way in one wide range red bar like this that you should be in the position to be losing 50% of your account. This may have been a nasty bar, but even at 1% risk, you would have had to lose 50%. I mean, that's a lot. 50R is crazy. So my point is, this person was clearly risking too much, and they didn't take their stop loss, and they admitted that. All right, so it's better to lose 1R than 50 plus R. Okay, so the point is not a bad pattern. Did nothing wrong for the entry. The problem here is not taking a stop loss. So I hope you guys are learning a little bit every week when I put these When Will the Insanity Stop lectures in, because most of you are struggling with money management and psychology. Realistically, sure, you make mistakes with patterns. We all do from time to time. But if you can control your money management, you can control your emotions, it will never be that bad for you. It will never be that bad, right? Who cares if you lose 10 trades in a row at $10? Ooh, you lost $100. It's not going to end your world, will it? But imagine if you were risking $1,000 a trade and you lost 10 and you only have a $20,000 account. You're going to get hammered, okay? All right, so let's dig into the good stuff, all right? Let's dig into the good stuff. So I thought this would be an appropriate lecture today, given where the markets are at. So we're actually going to end this lecture talking about the markets. But before we end talking about the markets, we're going to lead up to that point. And we're going to talk about trend lines, trend line breaks, and a little bit about transitions. Okay, so, and just so you guys know, this is the last text slide you will see for for the entire lecture. There are no more text slides. So I expect all of you to pay attention the entire time. I put all the sexy charts in today. Okay, Halle Berry's on every single chart today. All right, so downtrend line. I don't talk a lot about trend lines. Okay, and to be honest with you, I would say, and I just spoke to Anmol about this last night, this is one area that I probably should have done a better job in professional trading strategies with. Professional trading strategies has everything in it. But the one thing it doesn't touch very much upon are trend lines. Why? Because I don't really use them that often myself, but they can be very, very helpful. So the first thing is very basic. I'm not going to spend a lot of time on how to draw a trend line. So when you see a stock in a downtrend or an uptrend, what you want to do, guys, is you want to go to the most recent pivot. Look to the left, like Beyonce says, and go to the most recent pivot low. LPH, lowest, well, I don't know why it says high. It should say, yeah, no, that's right. All right, that's right. Sorry, my bad. Lowest pivot high. So you're going to look to the left, and you're going to, okay, where is the lowest high? Well, in this case, you look to the left, this pink dot is where the lowest pivot high is. Okay? It's called an anchor. This only changes when the stock puts in a new pivot low. Right? So until the stock puts in a new pivot low, this pivot, this dot will not change. It will stay there. Okay? After you find this lowest pivot high, then you're going to do the opposite. You're going to look for the highest pivot high on the chart. Okay? And that highest pivot high in this case is all the way up here where the other pink dot is. You're going to put a dot there, and you are going to connect the dots. But there's one key thing here that's important. In connecting the dots, make sure you don't cut through significant price action. Look, if it peekaboos above the line, that's fine. But if this pivot right here is all the way up here where my cursor is, you can't do that. What do you have to do in that scenario? You got to bring the dot down. Let me repeat this because some of you just got confused. So in this case, we find the lowest pivot high, put a dot there. We put in the highest pivot high, we put a dot. We connect the dots. Notice we're not breaking any price support on this pivot. We're below the price support or right at it, right in the range. You can slightly be below it, but just you should be right close to it. However, if this pivot right here was up here and it broke above this, what we would have to do in that case is take this pink dot and lower it down to this dot. And then you would draw the trend line from these two dots because you can't break through price action. You don't want to be breaking through price action. All right, so you don't want the trend line to be cutting through pivots. If so, move the pivot down. All right, move the dot down. All right, so that's your basic trend line. The same is true for an uptrend line. It's the same thing. Okay, so here's a couple comments about trend lines. Did I lie? There was this one text slide. It's the only text slide. I told you there'd be no more. I lied. Trend lines are evolving indicators. What does that mean? They're changed with each new high and low. So if you're in an uptrend and there's a new high, you change the trend line. If there's a new pivot low on a downtrend, you change the trend line. They don't stay the same all of the time. Okay, they're relevant at the time in which you draw them, but they have to be redrawn for every pivot high or low that's new. Okay, trend lines help the trader observe the flow of funds in a stock, the flow of money in a stock. For instance, a downward trend line tells the trader that the flow of money is moving out of the stock or the market, and the odds are what? On the short side. But an uptrend says the opposite. Okay, so the goal basically, guys, is as long as a stock is staying below the downtrend line, stay short. As long as a stock is staying above the uptrend line, stay long. Pretty simple concept, right? Think of it like kind of like moving averages in a lot. So you're going to short all the rallies in a downtrend. You're going to buy all the pullbacks in an uptrend. Simple stuff. Trend lines help provide the trader with the earliest possible indication of change. And this brings us to the topic which deals with what? What action is taken when a trend line is broken? And that's what we're going to focus on today. What do we do when a trend line is broken? Okay. First, let's take a look at what it looks like. You might notice this slide from a few months back. So this is what we call a transition and a retest and failure. So this is the same slide you saw. Note the orange trend line. So right here, the stock broke above the trend line. So just real quick, the stock breaking above the trend line is a warning sign. Note, it says not an action event, it's a warning sign. Okay? The question then becomes is, what is the warning? The warning is the stock is not as weak as it used to be. Be careful shorting this stock. If you have just recently broken through a trend line, be careful about shorting this stock. Why? Because when a stock holds a trend line, it's typically a smooth downtrend with lower high, lower low, lower high, lower low. And if it held the trend line, it would be another lower high and another lower low. But it didn't. It broke above it. So now what? Instead of getting these 30 to 40% retracements on the pullback, see it bounces right here, about a 30-40% retracement. It bounces about a 30-40% retracement. Note here, it bounces, and now what? The retracement level at this red line is about 80%. Well, if a stock retraces 80%, what is that telling us about the stock? It's telling us, in this particular case, the stock is not as weak as we once thought it was. So if it's not as weak as we thought it was, why would we be so eager to short this? You wouldn't be. That's the whole point. Okay? So breaking the trend line is your first warning sign that maybe buyers are stepping up more than they had previously. That's warning sign number one, but there's nothing we're going to do about it. We're just going to wait. Then in this case, the stock continues higher, 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 retraces about 80%, and now we go, whoa, that's more than the 50% that we're normally liking to see, and it broke the trend line. This stock is a lot stronger than I thought. What's the warning sign? Possibly, we don't know yet, possibly the next pullback will not put in a new low. Notice, new low here, new low here, new low here. Now that we have all this new information over here, we might not put in a new low. And that is exactly what happened. The stock put in a higher low, and we call this a retest and failure. What does that mean? It means we retested the prior pivot low, but we failed to put in a new low. This is a very potent sign, guys, okay? So we failed to put in a new low, warning sign, possible action event, depending on how much penetration this prior pivot had. If this prior pivot penetrated 100%, meaning all the way over to here, and then pulled back 50%, I would say this is an actionable buy setup. But in this case, it's a little bit different because it penetrated 80%, which is good, but it also pulled back about 80%. So you can get in here at the retest and failure, but that's a bit more aggressive. Okay, it's a bit more aggressive. All right, so this is what a trend line break looks like, and this is what a transition. So realistically, guys, what is happening here? The stock is going from a stage 4 downtrend into a stage 1 double bottom retest and failure back into up here a stage 2 uptrend. So we've really hit 3 stages here. Stage 4, stage 1, possible stage 2. Okay? These are the best areas to buy stocks. Period. They're the best areas. Not the retest and failure, but when they've put in that first higher high and higher low, that's called a transition. You're between a stage 1 and a stage 2. It's the transition. These are some of the best areas you can buy stocks. Let's take a look. All right. Here's a full chart. Now, to be clear, you guys always comment, you don't talk enough about swing trading. Even though I did talk about it last week, you don't talk enough about swing trading. Guys, what time frame is this chart on? It's a weekly stinking chart. Is that not a swing trading chart? Heck, it could be borderline a core trading chart. We're talking about a stock, and this is a little bit old, from 2017, that lasted till the middle of 2018. It's a 1.5-year trade. That's like a core trade. Why am I commenting? I'm commenting because these trend line breaks, these transitions, they happen on 1-minute charts. They happen on monthly charts. They happen on any time frame that you look at a chart on, from a yearly down to a 1-minute. So don't give me, oh, you don't talk enough about swing trading. It's the same as intraday trading when it with regard to the concepts. Scanning, it's the same. We looked at it last week. So stop making those comments. They're one and the same, intraday trading and swing trading. Okay? All right, so what do we do here? Well, we go to the left. The first pivot that we see right here is this one, pink dot. Go all the way to the top. The highest pivot high is right here. Note, draw the line, we connect the dots. But we're not really cutting through price action. Sure, we cut through a tiny little bit of a topping tail, but not very much. It's pretty close. Okay, so that line is acceptable. What happens here? The stock puts in a higher low and breaks above the trend line. It also puts in what? A higher pivot high. So the wide range bar breaks the trend line. It breaks above the prior pivot high and we get a pullback. So when it says, what is this? What's this? These are both buy setups. Okay, both buy setups. So is this one a little bit more aggressive? It is a little bit, but be mindful. We already put in a higher low. We already put in a higher high. You could make an argument that we put in multiple higher highs because this pink dot broke above the prior pivot high. All right, so it broke above the prior pivot high. Now it puts in another new high. So now we have multiple higher highs and multiple higher lows. So at this point, you are officially in a stage 2 uptrend. This is a buyable pullback. Guys, take a look where you're at here. You're at the $20 area. Stock goes back to 50. 50 bucks. That's a 250% return on your money in a year. Think about what I just said. 250% return on your money. Most investors are happy to get 10% a year. You could have made 250 on this. Even if you got out over here, it still went to 35 bucks, and that's a, I don't know, 75% return on your money, something like that. Pretty good. Okay, so buyable pivot, buyable pivot. Okay, so now we're seeing, again, stage 4 downtrend into that double bottom retest and failure. Stage 1 back into a stage 2 uptrend. Next. Same situation. Note, we go to the left. We look to the left. That's the closest pivot we find. Put a dot. All the way to the highest pivot high on the chart. Highest pivot high on the chart. Put a dot. Connect the dots. Now notice, in connecting the dots here, there's a prior pivot here, prior pivot here, prior pivot here. We're not cutting through any of those. We're not cutting through any of those, which means this is an acceptable trend line. If we cut through some of this price, we would have to lower the dot to a prior pivot. Okay? So when you look at it that way, the trend line's acceptable. So now what are we looking for? Well, we're looking for either a retest or a break of the trend line or both. Okay? Retest, break of the trend line, or both. Everything we always do, guys, is in New York time. Everything we do is stock market time, New York time. Okay? Makes common sense, doesn't it? It's like par on a golf course. We all need something, a common ground. All right. So we break through the trend line here. And what happens when we do? We put in a higher pivot high. So we already had, and this is the interesting part here, we actually had the retest and failure before we broke the trend line. Most of the time you'll break the trend line first, but not always. Not always. In this case, we had the retest and failure first, then we broke the trend line. So now we have a higher low and a higher high and a higher low. Guys, what do you think? Good buy setup, bad buy setup. Bottoming tail, doji bar, 50% retracement, rising moving average. After it breaks the trend line, puts in a higher high and the second higher low. I'd say really nice, right? I mean, that's a really nice buy setup. And that's about the best area you can get. And if we're right, this stock should be moving back into a stage 2 uptrend and possibly, again, who knows the future, possibly getting back maybe near the $60 mark. But even if it's only a 50% retracement, you're getting in this stock at like $27 with room back to like 45. At least room back to this pivot, and that pivot's like 37. So worst case, you have $10. What's the stop loss? About $1. So worst case, you're going to look to make 10 to 1 on your money here. It's pretty good. Okay, next. Here's another example. You've probably seen this slide before because I've used it before. Go to the Lowest pivot high, which is right here. In this case, there are a bunch of equal pivot highs, topping tail, topping tail, topping tail. But here's the pivot area. Put a dot. All the way to the highest pivot high, put a dot. Connect the dots. Notice we're not breaking through any price resistance or pivots. Okay? We're not. Line is right on top of them where it should be. So what's our first warning sign? We break above the trend line. Is this an actionable event? No, absolutely not. It's simply a warning sign. It's simply a warning sign. What's the warning? To repeat myself, buyers are starting to creep in. Buyers are creeping in more than they have in the past. Therefore, we might need to reevaluate. Guys, I want to be clear about this. Just because we break the trend line doesn't mean we can't put in a new low. That's why we wait for the retest and failure. Let me repeat it because it's very important. Just because we break the trend line does not mean we can't put in a new pivot low. This is why we wait for the retest. That's why the retest is so important. Okay? So in this case, we break through the trend line. We break through the moving average, but we still put in a slightly lower high, but we put in an equal low. So now we're getting what? More confirmation. We're getting multiple concepts converging in an area. The multiple concepts here are break of the trend line, break of the moving average, equal or higher low. Cool. Is this buyable? No. It's 100% retracement. And we put in a lower high. This is not a buyable retest and failure. It's not. Okay? Exactly. Don't FOMO the trend line breaks. Be patient. Wait for more confirmation. All right. So now, stock grinds and grinds. It's still not looking that great, but we can assume that buyers are stepping up because it didn't put in a new low. But there's no actionable event right here. Then this happens. Then the wide range bar comes in, breaks this pivot, and this pivot, and then it gives us what? A flag. A perfect little flag. Lower highs, higher lows, little wedge flag. This is ridiculous how nice this is. But let me digress and ask a question. Right here, lower high, above the moving average. Buyable buy setup right here? Yes or no? Buyable buy setup right here. What do you guys think? Yes or no? Right here, buyable buy setup. Yes or no? I'll give you 3 more seconds. Good. You all passed, except for one person, 2 people, 3 people. Whew. You were doing so well, guys. What happened? The answer is no. No and no again. Why? There's a pivot here with terrible risk to reward. Terrible risk to reward. And as if that pivot high isn't enough, what about this pivot high right here? And what about this pivot high right here? So everybody who said yes on this, you don't listen to Beyonce very much, do you? To the left, right? How do you not like Beyonce? Come on, man. She's hot. Anyway, look at this right here. You buy right there. Put your stop right here. What do you have? Less than 1-to-1 to the prior pivot. That's not a good risk to reward. And then if that's not bad enough, the next pivot's right next to it. If that's not bad enough, the next pivot's right next to that. My goodness gracious. What were you thinking? No, this is not buyable. No, it's not aggressive but buyable. It's just not buyable. Because some of you said it's aggressive but buyable. No, it's just not buyable. It's just not buyable. So anyway, wide range green bar takes out this pivot, and this pivot. Lower highs, higher lows. What a gorgeous wedge play, right? Moves up, pulls back. Now, here's a rub. Here's an interesting question. Is this a buyable ad? It's tough, guys. It's tough. You put in a higher high and a higher low, and now you technically have an uptrend, right? You have multiple higher highs and higher lows, but this wide range bar is tough. Yes, you're pulling back to minor support, level 2 support. Yes, it's about a 60% retracement. Yes, it's above the moving average. Yes, it has a bottoming tail. But that wide range red bar scares me a little bit. I don't know if I would buy this. Hindsight's 2020, and it's easy to say yes in hindsight. But in real time, when a stock drops from 51 to 47, it's hard to say. There are plenty of reasons to take it, and there's a couple reasons not to take it. That is what I call a decision play. That's one you could make a strong argument for, and you could make an argument against. Okay, so I call it a decision play. All right, next. So now, again, Go to the most recent pivot low, right? The highest pivot to the left on the lowest pivot high. Oh my goodness, I'm fumbling my words. All right, lowest pivot high right here. There's a pivot, draw a dot. Go all the way to the highest pivot high. There's a pivot, draw a dot. Connect the dots. Now note, there's a tiny, tiny little bit of price action you're cutting through. That's okay. You just don't want to be cutting halfway through the pivot, right? It's okay if you peekaboo the top and cut a little bit off it. That's fine. Okay? Before we get to this, note what's happening here, though. The stock is going lower right here, consolidates out. Notice, still below the trend line right here. Notice, it's still below the declining moving average. What is that right there? That's a breakdown, a really nice breakdown. This stock is putting in lower pivot highs and lower pivot lows. It's staying below the trend line right here. It's staying below the moving average right here. That's a quality breakdown. There's nothing wrong with trading that breakdown. You get into that thing at like $14.50, give or take. The thing drops to like $13.50. $1 is pretty nice. Now, granted, you probably have to hold it overnight because it's a 60-minute chart, but it's still a nice breakdown. Okay? So anyway, after this big move, notice on the third wide range bar, it puts in a big time volume spike with a bottoming tail. So this is a warning sign also that price action might be a little bit extended because this is a wide range, what I would call ending bar, because it's not the first or second bar of a move. It's the third bar of the move, and it's wide range. So it's more likely ending a move than igniting a move. It's got big volume, and it leaves a bottoming tail. So now you actually have an earlier warning sign than the trend line. Now, here's the question. Would you short this? See, before we even get into the transition, what about this sell setup here? It's a bona fide sell setup. Higher low, higher low, higher low. The red bar right there, you get a little doji bar next to it. You're below the trend line, below the moving average, 50% retracement. Would you short it? It's a tough question, isn't it? It's a really tough question because everything, if you were to go by the book, you'd sit there and go, wait a second, let me check all the boxes here. So 50% retracement, check. Below the moving average, check. Minor price resistance, no, it's not there. Okay, we missed that one. Higher lows, lower highs, yup. Changing the color bar, turned red, yup. Doji bar, yup. Downtrend, yup. I mean, there's a lot of things to check on this. But you look to the left and you go, I'm shorting this into a wide range red bar with a bottoming tail and on volume. It's a tough short play. It's a tough short play. It's one of those that would give you pause. You might even take it, but there's enough reason to take it and there's enough reason not to take it. It's a tweener. You guys hear me use that word? It's a tweener, right? It's one of those you got to flip a coin sometimes. And trading is not always cut and dry, right? Sometimes trading makes us make tough decisions, and this is a tough decision, okay? Here's how it really works. Let's be honest. Let's be honest about it, guys. Come on, call it what it is. You're up 4 or 5R for the day. There's no way you're taking this. You're down 3R, 2R for the day. You're taking this. Sad but true. The psychology, that's the way it works. Sad but true. Okay? All right. So let's get to the point at hand here. Now we finally over here break the trend line. But notice, this is another example that puts in a higher low before it breaks the trend line. Okay? Puts in a higher low before it breaks the trend. So we already have our 2 warning signs. One warning sign is what? Wide range bar on volume with a bottoming tail. Ending bar. That's warning sign 1. Warning sign 2, higher pivot low. Warning sign 3, breaks through the downtrend line. What's warning sign 4? If we're going in order, we're marching across the chart. What's warning sign number 4? 4 or 5. They go hand in hand. So warning sign 1, wide range ending bar. Warning sign 2, higher pivot low. Warning sign 3, break the trend line. What's warning sign 4? Okay, moving average break. Good. What's warning sign 5? What's warning sign 5? You're going to miss it. I'm telling you guys are going to miss it. Somebody said a higher low, and somebody said it breaks a new high. I like the way you're thinking, both of you, but only one of you can be right. Only one of you can be right. Warning sign 5 is a double warning sign. It's a double. It's a higher pivot high and the failure of this sell setup. I'm going back a few weeks, a few months, guys. Remember we talk about the failure of a sell setup in one time confirms the buy setup in another time? Remember that? Do you remember that line? The failure of a setup in a lower time frame confirms the buy setup in a higher time frame. Well, this isn't exactly the same, but the concept is similar. The failure of this sell setup over here confirms the buyers over here. It's not a buyable point yet, but the failure, this new pivot high, is also the failure of this sell setup. So if you shorted this stock, this pivot high here stops you out. So let's go over it again. I know I'm spending a long time on this slide, but there's so much to it. Warning sign 1, wide range ending bar on volume. Warning sign number 2, higher pivot low. Warning sign number 3, breaks the trend line. Warning sign number 4, breaks above the moving average. Warning sign number 5/6, puts in a higher high and fails the sell setup. Then warning sign number 7-ish, if we're up to that, is the higher pivot low. And that is actually buyable. Why? Because of the higher pivot high and multiple higher pivot lows. And then trucks back up. Goes from 14 back to 15 bucks. Now, do you see how we broke down that chart? This is the way you need to be breaking down every chart all the time. That the more attributes, the more concepts you can get to converge in an area, the more reliable your trades will be. I use that comment frequently, but it's the way you need to be viewing charts. You guys hear me say this comment all the time. Look for reasons not to take the trade. And how do you do that? By looking at both sides. Look for the reasons to take it, look for the reasons not to take it, but you break it down systematically. Okay? Break it down systematically. All right, next. Trust me, we're going to get to some uptrend line breaks. Now, why am I showing this chart? Because this is an intraday chart. We've been focused a lot on the daily charts, the 60s, the weeklies. You guys all say you don't talk about swing trading. Every one of those charts I just showed you was a swing trading chart. Okay? It was a swing trading chart. Now we're going to finally talk about an intraday chart. This is an intraday chart. Okay? So, what do we have? Look to the left. There's that lowest pivot high. All the way to the top. There's that pivot high. Now note guys, what if we put the dot here? Now watch. I'll draw it. What happens now? What happens if I move the dot to here? Now we're cutting through all of this price. We can't do that. Okay? You don't want to cut through the price. Therefore, take this, move it back to this pivot, and now we're no longer cutting through price. We draw and connected our dots. Whoops, sorry. Okay. Pivot, draw the line. All right. First thing that happens is break of the trend line. But notice, even when we break the trend line, we're still in a downtrend here. It's just a warning sign. It's not an actionable event. We break above the moving average. We put in an equal pivot high. That's powerful. Equal pivot high is powerful. We pull back. We have a higher pivot low. This is a very aggressive buy setup. Okay? This is a very aggressive buy setup. Why? We don't have a prior pivot high yet. It's an equal high. It's not a higher high. So yes, it's a higher low, right? This low is higher than this low. That's good. But we don't have a higher high yet. So this is a very aggressive buy setup. You're still under the moving average. For me, this is not a buy setup I would take. So when it says aggressive buy area, to me, it's a non-buy area, even though I'm the one who put that there. All right? But I just want you to think and talk through these things. Equal high? Nope, not good enough. It had to put in a higher high. I'd probably consider that a decent buy setup, but it didn't. Put in an equal high. So bounces back up. What do we have? Pivot. But this is important, guys. This is important. Instead of pulling back, which is a correction through price, the stock consolidated, which is a correction through time. But what is so important about this consolidation? The range in which the price action takes place. See, when you pull back, that clearly means sellers, right? There's some sellers in here. When you have a consolidation, It's mainly buyers holding and propping the stock up. And the reason that it hasn't pulled back is there's far fewer sellers in there. Okay? So it's not that the buyers are overwhelmingly strong. They're strong, but there's just not many sellers here. So by definition, by the consolidation definition, there's strength because there's lack of weakness. And you're going, wait a second, duh. But it's true. This correction through time is showing that sellers are not interested in this stock. Buyers are keeping it up, and those sellers are even testing it. Okay, we don't have a shakeout bar or anything, but here's the good news. You're consolidating at the prior pivot highs, okay, which means 100% retracement. Good. The level and depth of penetration is good. Next, it's a narrow range. Next, it's above the moving average. It's beautiful. This is absolutely buyable, and it's beautifully buyable. And it's a relatively smooth pullback, so the move back up to 93, 94 should be relatively smooth where your target area is. This is a beautiful, beautiful breakout. I'm going to call it like 83 bucks with a stop at like 80.50, $2.50. Guys, this thing popped like $7 in a short period of time. Beautiful. Okay? All right, let's move on. Now, we looked at this chart not that long ago, right? We looked at this chart not that long ago. So we have a stock on a 5-minute, lower high, lower high, lower high, lower low, lower low, lower high, lower low, lower high. But note, significant new low? No. It's a relatively equal new low. Relatively equal new low. And then we put in what? About a retracement point that's 60%. So now, it says entry and stop loss. But what's the expectation here? If you're in this, if you choose to short this, the expectation is maybe it can get to the low, but do not expect it to put in a new low. That's the expectation here. Yes, it's still in a downtrend, but that double bottom or that new low that's not significant says buyers are creeping in sooner and sooner, right? This was a significant. See this pivot here, 38.80? Well, this pivot's at 38.50. That's a significant new low. This pivot's at 38.53. The new pivot's at 38.43. That's a significant new low. Well, breaking the low by a penny is not significant. Buyers are stepping up sooner and sooner. Selling pressure is easing. Buying pressure is taking over. So what does it look like? It looks like this. It looks like this. There's your trend line. And what happens? We break the trend line and we put in a higher low and bounce back up. So real quick, this isn't always about buying a stock. See, what we've been talking a lot about here is transitions, right? When is the best area to buy a stock between a stage 1 and a stage 2 and get in at the bottom, right? That's one of the topics we've been talking about today. But the other topic is when to get out of a trade, when not to take a trade, right? So in this case, you're riding this down, adding on the pivot, and now you see this happen. Oh, I might want to reevaluate adding right here, right? And now you know this pink line at the bottom is a hard target. So you might have been riding this stock down, but then you see the trend line break. You see the double bottom retest with the trend line break. And now all of a sudden, you have to question whether or not it's going to actually put in a new low. And in this case, really, really question it. Okay, and guys, this last slide is one we've seen before. We talked about this a couple months ago. So now we're just merging concepts over different time periods. So I don't think I would short that. And if I was in it short, I'd probably be tightening up my stop. Because now that we put in an equal low and we broke the trend line, you can't expect this stock to put in a new low. It might, but the odds are against it. Okay? Now, let's change gears. Let's change gears. I only have about 3 slides left, guys, and 2 of them are the market. We're going to talk about the Qs and the SPY here soon. All right, so what do we have? The same exact thing, but in the opposite format. Now it's an uptrend line. So you're going to do the exact opposite. You're going to go to the lowest point of the chart, the lowest pivot, and put a dot. Okay? And then you're going to go to the highest pivot low. The highest pivot low is here. Now you could put it there, I suppose, but it's right here. Okay? And you're going to connect the dots and extend into the future. Just extend it out to the edge of the chart. Okay? I want you to take a look at this. I want you to take a good, hard look at this. Okay? Revelations, aha moments are coming up. Okay? There's our dot. There's our dot. We connect the dots. What does this tell us? It tells us as long as this stock stays above or at this orange line, it's strong. That's the reference. It's strong. Okay? I want you to pay attention to this right here. See my cursor? Pay attention. Pay attention right there. It's magic. It's magic. Is this future prophecy? Guys, let's go back. How much before was this line here before the price action was there? A long time. This line was drawn here, and look how much time it took before price action got back up to here and failed. So this predicted basically where the stock would likely pivot. So what do we have here? A lower pivot high. So this is a retest and failure, lower pivot high. So notice the trend line was there long before the stock ever traded here and pivoted here. Okay? But let's break it down. So the first thing that happens is what? The red bar breaks below the trend line. The second thing that happens is the red bar breaks the prior pivot low. And in this case, it doesn't just break one pivot low, it breaks many pivots. One pivot, two pivots, three pivots. Actually, you could make an argument 4 pivots. So the first thing that happens, not an actionable event. You're not going to do anything about it. The first thing that happens is it breaks the trend line. Second thing it does is breaks one pivot, two pivots, three pivots, whatever. Okay. But then notice the retracement level here is about 100%. The green line is about the 100% mark. It's about 90%. So what's the expectation now, guys? Before this even happens, what's the expectation when you do 100% retracement after you break the trend line? What's the expectation? What's the expectation here? Let me give you a hint. The expectation about the bounce. What's the expectation regarding the bounce? No new high. Exactly, Vladislav. The expectation here is this is going to put in a lower high. That's the expectation. That tells us this stock is likely transitioning. It was in a stage 2 uptrend, but this is going to be a double top stage 3 retest and failure, which makes this an early, very aggressive shortable event. This is a little bit better as a short because of the 100% retracement. It's an early warning sign. And I want to reiterate one more time. The trend line was here long before price action pivoted here. It's predicting the future. Now, how do I tie this all in? Well, let's talk about the market. So we just talked about trend lines and the uptrend, the downtrend, etc. What is this? This was as of yesterday, so it does not include today, but it's as of yesterday. Okay, and the SPY's at like 311 days. Unbelievable. Anyway, go to the most recent pivot low. It's right there. Put a dot. Go to the lowest low there. Put a dot. Connect the dots. Extend into the future. 340. Now, what happened here? Now, I understand unusual times. We'll talk about that. The reason this thing got hammered is likely because of, well, current events, right? We all know what they are, okay? Coronavirus, etc. So we did 100+% retracement, 110, 120% retracement, okay? Trend lines all the way up here. Stocks retraced, I don't know, 75%, 80%, something like that. What's the expectation, guys? You just told me we weren't talking about the market on the last slide. We weren't talking about the market on this slide. And you told me the expectation was lower high pullback. So if that's true on this particular stock, shouldn't it also be true on the market? So all of you that feel like you missed the low, you didn't. This is coming back in. Okay? guys, let's talk some common sense for a second. I know most of you are getting all that FOMO right now. I should have bought more down at the bottom. 40 million people unemployed. Businesses, some of which will never come back. Airlines are hurting. Hotels are hurting. Cruise ships are hurting. Banks are going to be hurting soon. Why? Because there's going to be less people borrowing money to buy things because they have less money because business is off. It's a ripple down trickle effect. They call it a tail. The tail of this is going to be nasty. The market right now is what I call irrationally exuberant. That's what this is. Irrational exuberance. Okay? And Nancy Pelosi can only give so much money to undocumented illegal immigrants. Uh-oh, I went political. Everybody's logging off right now. My point is, you can't prop up the market forever. Okay? You can't. You can continue to dump trillions of dollars in the market, but at some point, you're going to have to pay for that. Whether it's through high inflation, whether it's through a ridiculous national debt that you can't even pay the interest on, you will pay for it. Okay? This is not a free hall pass. My point is the market will feel that pain at some point, and the trend line right now is pre-predicting it. The trend line is pre-predicting it. Okay? Expect it, bank on it. Now, let's take a look at the Qs. The Qs are a little different. Let me explain a couple reasons why potentially. So we still have our trend line, right? We go to this pivot, put a dot, go to this pivot, we draw, and then we extend into the future, and oh my gosh, we've broken above that. And now we're not quite there, but we're very, very close to an all-time high. Okay? Well, we're going to pull back at some point, right? But take out the trend line, take out everything we learned today. The general concept we always talk about is what? Extended into resistance equals a pullback. Extended into support equals a bounce. Well, I don't think you can get much more extended than this. I mean, we popped from like 165 to almost 240 in 2 months, okay? While the world is falling apart around us. We're likely going to pivot and pull back. We might even peekaboo and put in a new high. But a couple caveats here. I truly believe the Qs are going to pull back, and they're going to pull back hard. But remember what the NASDAQ 100 is. It's Apple, it's Microsoft, it's Google, it's Amazon, it's Facebook. They represent a tremendous percentage. The weighted value of those stocks in the NASDAQ 100 is tremendous. Those are stocks and companies that are less likely to be affected by what's going on. Sure, they'll be somewhat affected. Everybody is. They'll be less affected. So, in my opinion, some of the price action in the NASDAQ is artificial because it's based around 5 stocks or the FANG stocks or whatever you want to call them. So this isn't the general consensus of what's really going on out there in the NASDAQ 100. It's just a handful or a basket of stocks that's propping this up. Now, that doesn't take away from the fact that the government is still spending money like they have an unlimited, like the tree is never going to die, right? Like hundreds fall out of the sky. Trust me when I say it, people, and it's on record now, it's recorded. The market is going to get hammered in the next 16 to 18 months. If in 18 months it hasn't gotten hammered yet, I'll come back on here and say I'm an idiot and I was wrong. Okay? I'm okay with that. But we are going to have to pay for what's happening right now. And it's not going to be a fast thing. All right? It's going to last and linger for a while. Okay? So, that's going to do it for this week's lecture. I hope that you guys enjoyed talking about down trend lines, up trend lines, trend line breaks, transitions. Remember the concept, the goal. Try to get multiple concepts to converge in an area. The more concepts that happen in an area, the more reliable things are. The more reliable things are, the more money you make. So what does it all really come down to? Discipline. Don't have FOMO. Follow your rules. Use a checklist. Pilots and checklists. Pilots don't leave the ground until they've gone through their checklist. Why? The consequence is severe. Be the same way. Be the same way. So, I'm Jared Wesley. I hope you guys enjoyed that lecture. We'll get back to it next week.
To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.